Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and holy shit, was today a complete and utter freaking disaster sell-off that Dylan and I have been talking about for a while because we kind of expected this. So we've been putting on some bearish trades and making a little bit of money off this whole thing. You know what? Still, I was down for the day, but you know what? It would have been a lot worse if I didn't have these bearish trades on. We're going to talk about what Chairman Powell said and why that matters.
Yeah. If you like this kind of entertained stock market, ooh, that was loud. Ooh, my bad. Sorry about that. If you like this kind of entertained stock market content, whereas two super guys trying to figure everything out, give us a like, subscribe, and we'll get started. Maybe. Turn myself down.
Two Super Guys Trade Stocks.
Dude.
Oops.
I've been saying it for a while. This picture of Jerome Powell just says he's about to screw some shit up, and boy, oh boy, did he today. All right?
Yeah. Today was intense. I got to watch the minute he spoke. I'll go over the graph, but it's wild. Also, called the 200 SMA rejection horde.
Yeah, I agree. I completely agree that I have to give you credit for that for sure. Helping me make some money. This is a heat map. That's S&P 500 today. Just like a sea of red, just an absolute bloodbath for most companies on here. There's a couple little dots of green here and there, but by and large, it was a dramatic sell-off. Even oil and energy stocks were down today, which is unusual given their recent trend. But it just utterly obliterated. And what he said wasn't anything new. I think part of the reason why it mattered so much is the tone in which he said it. He really kind of helped shape what the priorities are going to be for the Fed right now, and that they're okay with inflicting pain right now in order to achieve their end goals. These are some quotes taken from his speech. It was only 10 minutes long, so it's worth listening to. The basic idea in this particular one here, he's trying to say that their goal, their underlying, the only thing they care about right now, they're single-sighted in controlling inflation. That is what matters for the Federal Reserve and Jerome Powell right now. All right?
Yeah.
Control price stability. Yeah. So he talks a little bit about, what is going to happen as they try to control prices here. And he's like, reducing the inflation will require a sustained period of below trend growth. All right. This ain't going to be fast. It's not going to be over like a flash crash like we had back in the COVID crash. This is going to be protracted, is what he's trying to say right now. He's like, you're going to have the higher interest rates. They're continuing to ratchet up. They meet next month to decide on that again. That you're going to have this slowing growth. Obviously, 2021 was a banner year. Growth from that level is not to be expected. We've had 2 negative quarters now of GDP, and that's not likely to change. It's going to probably even get a little bit worse. Is kind of what he's hinting at here. And that ultimately they're going to crush demand so much so that the labor market's going to soften. Yeah, sure. Right now, there's 2 jobs available for every person available in the labor market, and we're looking at 3.5% unemployment rate. But that's not going to be the case. It's going to hurt the economy so much, what he's doing right now, that he understands that unemployment's going up. Okay, it's going to happen.
Also, labor market shrunk, which too. Also, if anyone sees me cheering, I'm not. If people had a bad day in the market, I apologize. I personally am shorting the market with $15,000, which is a lot for me. So, good day for me.
Yeah, it's a bold move for sure. But we got to call it how we see it. It just doesn't make sense. This is kind of going back to my point about the time period here. This is not going to be fast. They're going to be doing this over a period of time. The Fed has, if you see my previous video, has yet to start really selling their MBSs. Never mind the interest rates. Yeah, they still have more room to go in interest rates. They've sold some Treasury bonds, but they have yet to really start offloading MBSs in any meaningful amount. There's still a lot of stuff that they have to do to get back to where they were pre-pandemic, and it's going to take them a while.
Yeah, for those of you whose first bear market was COVID, this is going to last longer than 3 months.
Yeah.
It's going to last a while.
So. Yeah, you get into the exact numbers, it's a little bit tough, but this is not going to be that fast. The other thing here is he kind of gave you a little bit of a hint at what sort of time periods he's really kind of focused on. He's talked about this before, but really their eye is on this 70s and 80s inflationary period. That is where they're drawing the lessons from. And what is the major lesson of that period? He actually is going to give us 3 lessons here that he has kind of going forward. But the major thing that kind of strikes me is they failed to kind of aggressively move on it early, and they let this inflation linger for 15 years. And Chairman Powell is very much set on not having that be his legacy, that he let inflation linger. So they're going to be, if anything, more aggressive than they think they actually need to be in order to make sure that it does not happen.
I'm I'm down with that. Hit me hard, hit me fast, baby. Let's go. Come on.
I don't want to know what you're like in the bedroom.
That's
So,
what she said.
I know, right? Lesson number one is, as he talked about, it was debated at the time whether or not it was the role of central bank and if they actually had the power to control inflation. And it is now settled in that, like, it is accepted by most economists that central bank is able to control inflation and should control inflation and keep it at that minimal 2% kind of rate. All right. The stability of the underlying currency is that important to the economy. All right. That's their mandate. Lesson two was kind of what we talked about a little bit about letting it go on for time period, that you can't have the inflation expectation be factored into people's kind of mentality, that if people are thinking about it, that right there can then drive it, become this negative cycle where it reinforces itself and continues getting worse and worse. So he's saying you have to act aggressively to the point where people don't even think it's going to continue to go on. It can't be an option in your minds. Otherwise, it becomes a self-fulfilling prophecy.
Yeah, I like the example that he gave of in the 70s, where people thought inflation was going to be high, so they changed how they would kind of use their financial assets, just thinking it would continue to be high. So you have to change the rate and also people's minds.
Yeah, we've seen companies do it too, where they know inflationary pressures are out there, so they're front running it and they're increasing their costs more than their inputs are being done. That's why they're able to get these really fat margins we've seen recently from some large corporations, because they front run this inflation, and that's the narrative they've been able to push onto their customers. And then finally, this third lesson here is that same idea that you have to really be aggressive and crush it. You cannot let this festering little infection that is inflation linger any longer than it absolutely has to. Otherwise, you're gonna start to create that same cycle where it can last forever, and people get a mindset where they're continuing to expect further and further inflation. This 15-year time period, we're not looking at, hopefully nowhere near anything like that, but that's because they're gonna go through a lot of pain to get there.
A lot of pain. He said pain multiple times.
Yeah, it's really crude, but I can't remember exactly the movie it's from, but there's a scene where it's like, this will not be over quickly. You will not enjoy this. That is basically what he's saying about the economic downturn. Yeah, I think it's a very inappropriate scene, so I don't want to go into too much detail than that. But
girl with the dragon tattoo. Girl with the dragon. Yeah, that's it.
Yeah,
I'm pretty confident.
I don't know, but all right, we'll go with confident.
That. So this is our beautiful market. This is the 200 moving average. If only someone had been like, I don't know, let's look at the last 2-3 crashes and see what happened with the 200 moving average. I think it's going to hit and come right down. I didn't say that specifically. I did say it's going to bounce and then we'll see what happens after this. This rejection, okay, ignore these blue levels. These are day trading levels. Had a pretty good day today because the crash. But look at this volume, okay?
Yeah.
We immediately bounced all the way down to 403 off of this 200 moving average within a week and a half. That is insane. That is heavy, heavy volume down here. And throughout this day, if we go to a smaller time frame, it was just constant, all right? Now, one thing I want to show, because I thought this was cool, is let me zoom out here, but as he was talking, this is what the market did. All right, so we're chilling around just like an even 418. Okay, this is when he said, "Hello, everyone." That's all he did. That's it, right? His speech was only like 7 or 8 minutes. So he gets through the pain part, comes up, he leaves right here. We just come up at the end of the speech, and then it's a slow leak for the entire day. It's just an absolute disaster, all the way down. Wild.
That's fascinating. You would have thought it would have been maybe during the speech a little bit more. Well, people just needed more time to digest it. Why do you think it took the little
have
delay
no
there?
idea. He literally said, "Hello, market tank." And then he did his speech, recovered, came all the way up to VWAP, which is a very important day trade level, and then just sold off relentlessly. Not even a relief 15-minute candle the whole day.
Yeah, I don't know. Honestly, I don't think it's gonna be very pretty for the market for the next couple weeks. I would say
It's gonna
just
be pretty
because
for me.
we have a long way to go to get to like the next support level is kind of what I was thinking. More from
Yeah.
like that standpoint that we've become pretty extended on this little rally up, so there's a decent room to go down, of course.
Next support for everyone looking 385, 365. Those are major, major ones. Of course, you have your levels right here, but we already dove through them. So 385, 365. 365 is a previous low. Well, 361, but this candle. And yeah, we'll see what happens, guys.
Yeah. I'll be honestly a little scared if we start getting down to that area, but some stocks will be on sale. That's for sure.
I will be very happy. All right.
All right.
Have a good
Catch you
one.
guys in the next one. See ya.